Now we're looking at the state of the economy through the lens of the current state of Nigeria's external reserves. The country's reserves fell further by $175 million in February to $39.9 billion despite the upturn in the price of crude oil, the country's main source of foreign exchange. And according to latest data from the Central Bank of Nigeria, the external reserves, which closed at $40.52 billion in the month of December last year, dropped to $40.04 billion at the end of January this year, following a boost of over $7 billion from the international debt issuance and also the International Monetary Fund's special drawing rights allocation in the third quarter of the year 2021. Although crude oil prices have rallied strongly in recent months on the back of global supply-demand imbalances and geopolitical tensions, the latest of which is Russia's invasion of Ukraine, Nigeria has not reaped the benefits due to its low crude oil production and the rising cost of petrol subsidy. Amid rising oil prices, the big question begging for an answer is, why is the country's foreign exchange market depleting? To further proffer some solutions and answers to these burning questions and many more, I have joining me live from our Abuja studio the Director of Tax Reporting and Strategy at PricewaterhouseCoopers, Ayodelemi Akinduyite. Thank you very much for joining us on the show this afternoon, Ayo. Now, let's start with our first conversation, looking at the fact that we are seeing an increase in oil prices globally at this point in time. How do you see things playing out, especially with the current reality that we are having a downward swing in terms of our external reserves? An increase ordinarily would excite an economy, but we also have to pay for subsidy. How do you see these intricacies playing out in the coming days as well further?
Hello, hi, good afternoon, and good afternoon, viewers. So just want to confirm that you could hear me clearly.
I can hear you loud and clear, sir. I can hear you loud and clear.
Sorry, I hear you.
So I will take the question again. We've seen a downward trend in terms of the external reserves, irrespective of the oil price rally we are seeing occasioned by the Ukraine-Russia crisis. What do you think will play out in the coming days? Do you see a sharper decline in the external reserves, or you think by some miracle we would have some plateau?
Okay, thank you. That's quite an interesting one, and it's rather a paradox, because ordinarily one would have expected that with the rallying oil price that we'll be earning some healthy returns in terms of revenue from crude oil, but it's rather unfortunate that we really could not see the full effect of that in terms of an appreciable increase in the external reserves. Of course, as you are very much aware, probably about 80–90% of Nigerian external reserves come from revenue from oil and gas. But you know, the outflows seem to be quite substantial, and because the outflows, you know, a whole lot of it is being spent on importation. So that's really the reason why we're not seeing any appreciable improvement in the state of the external reserves. And in terms of what we expect in the coming days, I do not anticipate that there will be any material improvement as long as we don't change our way of life. You know, as Nigerians, we're very import dependent. Basically, spend the limited dollars, you know, importing all manner of things. So as long as we don't change that, and the fact that the supply ability to generate dollars is also limited, so it will be a challenge to see a significant improvement in the external reserves.
Okay, now, what's some of the biggest cautions you think we ought to have learned from the COVID-19 pandemic. These are looking at external shocks that we cannot necessarily control. We had the COVID-19 pandemic we had to deal with. Now we are dealing with the highlights and repercussion of the Ukraine-Russia crisis. At this point in time, what sort of buffer would you also expect us to have as a country to ensure that we have some level of stability, irrespective of what plays out on the international market?
Well, typically that's the way of the way the oil and gas business is. A lot of the times you have no control, or you have very limited control. So it's your ability to then take advantage of the opportunities that present itself. Typically Nigeria has no contribution to the factors that led to the increase in the oil price, but clearly experience have told us that if the oil price goes up, then the next thing that is going to happen that is then going to come down. Well, is Nigeria ready? Is Nigeria prepared? So, and I think that's the million-dollar question. How do we prepare for a time when the price of crude, comes down to maybe below $50? And I'm not sure as a country we have adequately prepared for that. The time to prepare for such scenario is actually now when the oil price is good and healthy, to be able to build up our external reserve. An economy like Nigeria with the level of GDP, with the population of over 200 million people, then typically our external reserve should probably be in the region of about $100 billion and above. So that gives us some level of buffer, when things don't move in your favor. So, but in terms of what we should do, it's basically to tighten our belts and not say because the oil price is good at the moment, then we just basically expend the whole of the forex that is generated, thereby not building for the rainy day effectively.
And then in the coming days too, we're also expecting the Monetary Policy Committee meeting to also hold and bring in focus all of these issues, the tension between Ukraine and Russia, its impact on the global economy. But now looking at what's playing out, the latest call by the federal government, we are looking at a call to the United States government to support Nigeria with funds to ensure that we have the nation's natural gas resources well set so that we can have it as an alternative source of energy for the European region. Do you see this in the long term being a sustainable effort to ensure that we have the buffer for our external reserves?
Well, of course, that would be a very positive development because effectively that improves our capacity to produce. At the moment, on the average, the production volumes in year 2021 was about 1.3 million barrels per day. That's clearly below the OPEC quota and clearly below the budget benchmark. So if Nigeria is able to access some investments, that will clearly help Nigeria improve the capacity to produce and be able to increase dollar revenue. Of course, as you are aware, the passage of the Petroleum Industry Act is expected to provide a stable environment. And one of the key objectives basically is to encourage investment into the oil and gas industry. Nigeria is an oil-rich gas province. So if the resources are there, you could imagine if we have 2-3 other LNG plant like what we have in Nigeria, liquefied natural gas. We have a couple of feeds coming up, but it's good that you did put things in proper perspective that This will probably be in the medium stroke long term. On the average, it takes a number of years, before you could mature sufficiently a couple of those fields. I recall some of those PSC contracts that were signed in 1993. Many of them did not start production until about the middle of 2000. 2005, we have Bonga Field coming on stream, and a couple of others subsequently. So have been able to assess the right level of investments, either from the private sector, which is really the key driver for PIA, or from support from the United States or any other government, has Nigeria been an alternative source of supply to stabilize whatever shocks that might be arising from the Ukraine-Russian war, will clearly be a step in the right direction that could then basically help Nigeria, improve its capacity to produce, But that's just looking at it from one end of the equation, which is basically looking at the inflow from oil and gas. But the question is, why are we not having substantial inflow from other aspects of the Nigerian economy? Why are we not able to curtail the spending, the limited dollar resources that we have? Why are we not able to curtail the way it's being spent such that we're able to optimize it, we're able to use it for the critical infrastructure, for investing in the productive capacity of the country? So those are important questions also that we then need to ask.
Definitely, we have to look at the bigger picture of expanding our base of revenue generation and forex as well. And I like the fact that you bring into perspective some of the issues that we have as burning corners within the country, which are yet to have the full attention of government and attend to them. Now, we have the reality of subsidy payment, which is also making us dip our hands into our external reserves. We are not necessarily putting our best foot forward in terms of processing and exports, and then we are having a high level of volatility and not enough allocation if we want to paint things clearly. We've had reactions from the Manufacturing Association of Nigeria. We also have the aviation sector saying, well, we don't have enough of allocation to support our business. How do you see the forex regime play out here, and how do you think we can also sustain liquidity going forward?
Well, thank you. Another very important question there. Well, to be fair, I think we've seen the Central Bank of Nigeria, the arm of, the banker, they have responsibility for managing the forex, taking some proactive steps, to mitigate any risk in that sector and manage the limited resources that is available. But, there's just a limit to which you can manage what is not there, So I think the medium-long-term solution is for us as a country to position ourselves in ways where we're able to generate sufficient forex. There's really no reason why we should not be doing that. If you just look at the agricultural sector alone, having the right level of investment to improve our capacity to produce, to reduce post-harvest losses, and some investment in small, medium enterprises, that can then turn these raw agricultural products into finished or semi-finished products, and everybody should be thinking export here. The agency of government, the export promotion agencies and all that should be focusing on this and how they could support small industries, to have a focus on not only local production, but exploring every opportunity that is available to export. And of course, more importantly, is also, like I mentioned, our way of life. So we shouldn't expect that the CBN is going to be able to, on its own, be able to manage this effectively if we don't manage, one, the little resources that we have. Look at how much Nigeria spend of importing cars, just cars alone. Look at the lifestyle of the senior government officials. Do they reflect the fact that as a country, we really have scarce FX? So these are fundamental questions. These are things that are well within the control of of us as Nigerians, as individuals, the kind of choices we make, for example, could imagine the number of Nigerians schooling in Ukraine and all over the world, burning the limited forex that we have, how much we give as scholarship for people to go abroad. We've been doing that for more than 50, 60 years. What's the impact of that on our economy? How well is that developing our economy? Can we then, turn around the strategy and say, okay, in the next 5, 10 years, we want to make the right level of investment into our universities, into our schools, such that we can provide world-class educational, system, that can take care of the needs of Nigerians, such that we don't need to go abroad. Then also even attracts foreign students, and that could be an opportunity for Nigerians to earn some forex, and every aspect of our life. We could look around, and there are opportunities for optimization, there are opportunities to cut down on the waste, there are opportunities to ensure that the limited forex that we have is spent to support the productive capacity of Nigeria, such that in the next few years, the next 5, 10 years, Nigeria is generating sufficient dollars that the CBN need not worry about managing FX and just basically focusing on putting the right monetary policies, to drive Nigerian economy. Clearly that will be, the direction that we expect things to go.
And now, wrapping up our conversation now, let's also look at the fact that the Nigerian economy is also largely dollarized. How do you see us also playing stronger in terms of learning from all of these cues? Because I asked earlier on, do you think we're taking the body language of government? Do you think it understands what's playing out in the international market in terms of learning from COVID-19 and now learning from the Russia-Ukraine tensions? Do you think the body language of the government mimics one that understands all of these intricacies playing at the global front? Hence, we need to contextualize our solutions locally and ensure that we still have that global appeal to ensure we're favorably positioned. Do you think the government understands this?
Unfortunately not, and that's the disappointing part of it. Like I said earlier on, at the moment we see the oil price doing very well, but those of us that have been around for a while knows that the next direction is likely going to be downwards. So when it goes down, are we ready? Are we prepared? Will we have enough reserves to be able to absorb those shocks? We've seen that before. When we have LT reserves, $60–80 billion, Nigeria was able to weather the storm, but at this rate, with the external reserves dropping and falling, clearly it doesn't show that we're prepared and we're ready. It doesn't give that indication that those at the helms of affairs, those that have responsibility for managing this economy, are taking learnings from those experiences and are appropriately putting the kind of structures, the kind of policies that is required, to ensure that Nigeria is ready and prepared, to take advantage of the opportunities it has. And if there are headwinds, if there are threats, we are able to adequately take care of that. We're talking about attracting investment into the oil and gas industry. A critical aspect of it is the impact of the general insecurity. And the fact that you have facilities that you invest millions, billions, to develop, and at the end of the day, those facilities are not appropriately protected. So that basically increases the sovereign risk of Nigeria, and those are issues that I expect government to tackle. So if those issues are not tackled, even with the passage of PIA, with more attractive fiscal regime where we have relatively reduced tax rate, where we have reduced royalty rates, meaning the government is willing to make some investment and saying, I'll take less now so that we can build a bigger cake. But those kind of investment that is much needed may not come if we're not able to address some of these issues, some of the challenges facing the country. And a major part of it is security. And a way to demonstrate that as a country we are ready, and we've taken some learnings from some of the experiences we've had in the past. You made mention of COVID, is putting in place the appropriate policies, to address some of those issues, the ease of doing business. How many Nigerians want to get involved in export business with some of the issues that we have at the ports, with respect to time it takes, to clear cargoes, with respect to the cost that is involved. There has been reports that it's probably cheaper in terms of logistic cost to bring something from China to Nigeria than to transport from some parts of Nigeria to the other. So basically, we really need to reform. We need to get the right level of investment, improve our infrastructure, and get Nigeria ready for business, and it's really important we take some urgent steps to address that.
Lastly now, Mr. Ayodelemi, as we are wrapping up now, the IMF is having meetings as well with ministers, African ministers of finance, African Central Bank governors and other representatives of the United Nations Economic Commission for Africa, looking at how well to strategize and put all of the economies at regional and continental levels much more prepared. We've also had cautions in terms of volatility in the loan markets as well, saying that, well, it's not going to be business as usual. The global economy is just gradually recovering from COVID-19, and now we have the Russia-Ukraine crisis. Hence, the regular flow of assistance might not be there.
Apologies, actually, I didn't hear you. I didn't hear that at all.
How do you see us panning things and having bigger conversations with other ministers of finance and central bank governors within the African continent now to ensure that we have a sounder level of cooperation? Can you hear me? Mr. Ayodelemi, can you hear me? Okay, now we're wrapping up the conversation with this last pointer where we are having conversations with other central bank governors on the next move to make in Africa as a whole. How do you see us also having that interconnectedness on a continental level to ensure that we put our economy on the best foot forward and rely on each other in terms of resource utilization?
Yeah, that will really be that will be a positive, a very positive one, such that African countries are actually able to trade. And it's a lot of the times we look at trade with countries outside Africa, but there is a whole lot of opportunities also within Africa in terms of synergy, in terms of even infrastructural development and all that. So I think it's step in the right direction if having countries work together, having some level of consistent economic policies, which then makes it easier to have a larger market, which makes it easier to be able to fully mobilize the resources across the African continent and get them working, for the benefit of the people.
Thank you so much.
That clearly will be a right step in the right direction.
Thank you so much. We hope that we have concerted efforts to ensure that we have the Nigerian economy properly positioned. We've been speaking with the Director of Tax Reporting and Strategy at PricewaterhouseCoopers from our Abuja studio. Thank you once again, and we hope government is listening and ready to take action.